So, hi everyone. Today we are interviewing Robby Yung. Or just having a conversation.
Very casual chat.
Yes. Okay, let's say that. From Animoca Brands, and Robby will answer the billion-dollar question: how to spot a unicorn. If you love this conversation and you are a venture investor, I would really love to invite you to our VNTR community. I will leave the link down at the video. Join us. We have amazing speakers. We get to know each other. We build relationships with other venture investors. We share deals with each other. We play paddle. We do wine tasting. We do hiking. We go on retreats. So there is a lot of things happening. And the best thing is that you build relationship with like-minded people and share your struggles but wins as well. See you on our next event. So a little bit of statistics. So I checked that every year there are 50 million companies like starting the business, but I think 150 million startups backed by VCs. So if we take this number, 150 million companies backed by VCs, and there are only 1,523 unicorns globally. So it is one company in 100,000 startups backed by VCs are unicorns. So our question is, and let's tap into Robby's brain, how to spot these unicorns and how many unicorns Animoca backed?
So I guess first this presupposes I know the answer, which is there's a lot of pressure on that. And I think we've been lucky actually to have been invested in, I think maybe 5 or 6 by now. But I think that's also because we've been in the right place at the right time, right? I think that a lot of this is down to good fortune and timing. I think that, as you know, we were talking about earlier, our journey in Web3 began in 2017 when we discovered blockchain, but it started much earlier. I mean, people by 2021, when we raised our first sort of $1 billion round, people were saying, "Oh, it's amazing, this overnight success." And I said to them, "We've been in the same office space for 22 years. This is not an overnight success. It's just that over that period of time," and we actually moved out of that space last year. So we were there for 24 years in the same office. But over that period of time, we have been several businesses, right? And most of the team has, come and gone over the years. We still have a handful of team members who have been there for the entire journey. But part of it is like staying the course and kind of finding your lane and figuring out how to make the most of the situation once that opportunity comes across your deck, so to speak. And that's what happened with us and blockchain. So we were successful in mobile games to a point as a casual mobile games company, but we didn't find the same kind of success as we discovered with blockchain. And I think that's because in the blockchain space, we were a little bit earlier. We had the good fortune to meet the team that was working on a hackathon project in Vancouver. And they had just written what we call the ERC 721 standard on Ethereum, which is also known as the NFT, or the non-fungible token. So they had literally just invented it the month that we met them. And so we collaborated with them on a game they made called CryptoKitties, which was the first blockchain game, and the game for which they wrote that token standard, because they were thinking, oh, well, it would be really cool if we could have trading cards and we'd have to make them unique. So how could we make a token that's unique? And I think it was because we saw in that idea the germ of this idea of giving people digital property rights that we knew this was going to be something big, and that we were sort of in the early days or the ground floor of something that was going to be huge. Excuse me. And so I think then our job was to really just figure out, how do we want to play a role in this, and what can we do?
Mm-hmm. Thank you. Yeah. So you mentioned timing. You mentioned timing and cycling.
Yes.
So there was a great timing for Web3, maybe still is, fintech and everything. How would you help other investors to identify what is the best timing? What is the best timing right now?
I think it's very hard it's very hard also to pin that timing, which is why I always talk about it as being kind of a marathon, because we got into it in 2017. People seemed very excited. For the first 6 months, it was the end of the ICO summer, and CryptoKitties broke the Ethereum network that Christmas. And then 2018, Ethereum was, $90, right? And people were like, oh yeah, these NFTs are kind of dead because we started trading Top Shots from, NBA Top Shots and stuff, but it hasn't actually gone anywhere. And then all of a sudden COVID hit and gaming went ballistic. And as we all know who are in the Web3 space, blockchain also went ballistic because people were interested in stuff that they could do from home. And so we actually really as an industry benefited from that time that everybody spent focused in online spaces. So I'd say, to answer your question, the way to predict it is to just persevere and to be there. Because despite the volatility in the space now, we've been in the Web3 space for 8 years, and the market has been, booming and bleak in alternating cycles for a long time. But we have conviction that this is a thesis that will play out, and all we have to do is to be patient.
Okay, yes. And how would you, in the very beginning, how would you be able to spot the founders and founder teams that would be able to go through ups and downs of the market? Are there any particular patterns?
Yeah. So I think that part is trickier. I would say that past performance doesn't, lead to future returns.
I always, as I mentioned before, like, exited founder, so it's
yes,
not right.
So I think exited founder, definitely. But I think also it's important. I think exited founder is another way of saying somebody who has experience. Because I think the trick is with people who are a little bit older and have had more experience, they can tell the difference between bumps in the road and things that are potentially terminal for the business, and whether it makes sense to persevere or to pivot. And those are the decisions that I think are the hardest ones to make, because, as an entrepreneur, my experience at least is that you're almost perpetually fundraising for the duration of whatever the business is. And that will be harder at times and easier at times. And, as you get older, you begin to understand that, don't waste time haggling over valuation and all these kind of things that you think are really important when you're younger. So I think that you're correct in that those exited founders will have learned those lessons already.
Yeah.
And so they'll be able to make a much more focused approach in their new venture.
So are there any patterns in unicorn founders?
I think it's just as much down to the person identifying an emerging space as it is to just the person themselves. Because it's also about the greater groundswell of what business opportunity is growing around, in my case, in technology, around a new technology or a new ecosystem. And I think also the founders I've seen to be the most successful are the ones that are also really able to communicate to their customers and their investors and their constituents what that vision looks like 24 months down the road, to show them that, look, this is why we are working on adopting this technology, because this is what it's going to look like. And if they can clearly articulate that vision, they can then bring other people along the journey with them, because people will be like, oh, yeah, actually, that makes total sense. I get that. And one of the things that a lot of founders, technical founders, really struggle with, I think, is communicating those points. Because one of the biggest challenges is that product is arguably the most important thing, right? But people who are very, very focused on product tend to emphasize the product and talk about the product and the features of the product. And people don't like our government here has the same problem at the moment, right? They don't talk about the vision and how your life is going to be better down the road. They talk about the nuts and bolts of what they're doing. And I think founders sometimes have the same problem. They're like, well, our transaction throughput is much faster than their transaction throughput. But that's not what people want to hear. They want to know everybody's going to be using this to pay instead of Visa and MasterCard. That's what they want to hear, right? So it's being able to articulate that vision to bring your own team and everybody else on the journey with you.
And also the third factor, like statistically, that helps unicorn, like founders to build unicorns, is having access to capital. So the founders who raised 3-5 rounds and who had not only millions but hundreds of millions raised,
Yes.
they are faster at becoming unicorns, or like more likely.
Yes.
What do you think about that?
I totally agree. I think that raising money is, there's quite an art to it. I think that it's an opportunity to essentially bring on board very smart people with lots of relationships who then have a vested interest in your success. And that's really important because it's also why I always advocate to people to have co-founders if they're thinking of starting a business, because if you do it by yourself, it's incredibly lonely and hard, and it's not worth whatever the upside is you think that you're going to get for not sharing a piece of that business. You always want to have other people to share the pain with you, trust me. I think that if you are able to bring investors along with you, and you're able to have access to those investors, the most important thing, though, in my mind, is to choose those investors who you think will actually be giving of their time and their networks by extension, but mainly their time to you. So be wary of just taking a check from, a firm with a fancy name or something like that, who may actually not be that interested in your project, but, is good for branding or something like that. Because what you want is you want the benefit of their experiences and their network and
Not
their
only
help.
capital, yes.
100%, 100%. And that's why I think some of these firms, like, famous VC firms, have built brand names on that, because their brand name or their networks can help attract other investors and other capital, or they may have other portfolio companies that might be really interesting for you to network with, whether as customers or business partners. And so that's a consideration as well.
Yes. So building network is very important. As you said,
Yes.
mentioned before, you had early access to amazing founders.
Yes.
Yes, which helped you to identify unicorns early on.
Although I think for us, our ability to identify them was not due to some, amazing crystal ball on our part. I think it's also because we took a very specific approach to invest very broadly across the space. So yes, we have, 5 or 6 unicorns, but that's out of 650 investments. There was a deliberate strategy. It was a deliberate strategy to say, we think we're in at the ground floor of this, and that there will be many successful businesses that will emerge from this sector, but we don't know exactly where. So we're investing in all the best people we can find, even if we're just going to write them a 100K check, because we want to participate. And also, all of those are opportunities, again, to learn and network with those people. And this network of founders that we have out there, in the industry now, is amazing, because we do so many other things together as a company, apart from just that original commercial relationship.
Yeah, amazing. Yeah, I met some people who invest 2,000 check and say that they diversify. They invest in a lot of startups. I'm like, oh, okay, that's interesting. So your suggestion to investors would be to diversify at the same time.
Well, especially if you're in a new emerging sector, because it's. At the time that we started our investing, most people were just, building apps on Ethereum mainnet, right? There weren't even L2s yet. So a lot of the basic infrastructure of the industry had yet to be built. And so for us, it was a very safe bet to say, okay, well, there are new companies launching like Polygon and Solana, et cetera. So we'll put small checks into all of these, because we don't know how this will play out. But there's lots of smart people and they're doing interesting things, and we want to be involved in as many of them as we can.
Yes, thank you. Do you have any questions from the audience? How to spot a unicorn?
Thanks for that.
Sure.
Just like you spotted a blockchain, say, 15 years ago, so 10 years ago, what would you say is the next blue ocean where the next generation of unicorns going to come out of?
Sure. So I think the things that excite us at the moment, there are a couple of things. One, we spent a lot of time talking about gaming earlier. I do think there's going to be a gaming renaissance, because gaming has been particularly hard hit, and as you know, lots of investors will tell you, when everybody else is running away, that's the time to invest. But I think we've been focusing a lot on the institutional financial side of crypto this past 24 months or so. So I think RWAs are very interesting. I think one of the themes of blockchain that we have loved since the beginning is this idea of democratizing access to financial products, whether those financial products are, home equity loans and distressed debt, or they're Pokemon cards. These are all just asset classes that we can open up access to. And I think that's really exciting. So, for example, we have a joint venture called Nuva with the Provenance blockchain, and we're bringing home equity loans from Figure's loan portfolio to DeFi. So Figure, as you guys might know, is now a public company, and they've done an incredible job tokenizing $15 billion of US home equity loans. It's the biggest RWA portfolio. But the challenge with those home equity loans is that actually they have very few customers for them. So there are like 10 customers who own that portfolio of loans. They're all the big boys, right? It's BlackRock, it's Goldman, etc. And so although it's great for our industry that they've tokenized this big asset class, and it yields 9% a year. It's an amazing asset. It's like a stable coin. But it's actually not having the benefit of tokenization because it's not really being used by anybody. And so what we wanted to do is we bring those existing now native digital assets onto the Provenance blockchain and issue tokens against vaults holding those assets. And then people can then trade those 24/7 and use them in DeFi and actually have more general access to liquidity. And so we think that this democratization is really interesting because just in the way that we were talking about earlier, you can vault Pokemon cards and trade those, NFTs around the world 24/7. You can do the same thing with home equity loans.
Mm-hmm. Any more questions?
I'd like to ask one more. So, just talking about blockchain, just staying on that topic, where do you see privacy in this conversation? Because I think it's one of these areas that's really interesting at the moment, and there's a lot of talk about privacy on blockchain.
Yes.
But do you think that would actually be the vault to which we might get another unicorn in that space? Just looking
Sure.
at the privacy side.
So I think privacy is very, very important. It's obviously one of the founding tenets of Bitcoin and blockchain generally. And I think that one of the things about privacy is that with blockchain, we have the opportunity now, and specifically with decentralized identity products, we have the opportunity as consumers, I think, to take back some of our privacy. One of the challenges we have in the Web 2 world is that we've basically given up all our privacy. And so there's a handful of data brokers around the world that manage all our information without our consent for the most part. And these are, now the 7 biggest companies in the world. And what we have now is the ability to actually bring back control of that data through decentralized identity protocols. This is where I'm going to shill our own platform again, because we built a product in this space called Mocha Network. But the idea was really simple. The idea was, why shouldn't we hold our own data rather than having the data siloed in companies and having, 10 different profiles of myself with 10 different companies, which, is liable to cyber attack and hacking and, creates GDPR headaches for those firms. Why don't I just possess my own data in a secure way, decentralized, on-chain, but locked up in ZK proofs, zero-knowledge proofs, so that whenever I go to a website, I can then present and share whatever data I choose to share with them, and it's all available, my entire profile, because it's mine, right? They can have my, demographic information, whatever I want to share with them, but I can choose to share that. And because we do it with ZK proofs, they don't actually have to possess my personal information. They just need to verify it to the standard that they're required. So if they need to verify I'm above the age of 18, the ZK proof can do that, but not necessarily give them my birth date, right? Whereas right now, I need to give them my birth date to buy flowers online for my wife on a holiday. It's ridiculous.
Mm-hmm. Interesting. So I have a data here. So according to an Antler study, September 2025, over 3,400 founders 900 unicorns in Europe and US. 14 European companies founded since 2020 have already reached billion-dollar valuation in just 2 years versus the previous 7.2 years on average. So companies in Europe are scaling in 2 years than in 7 years. What do you think is the main reason for that? And would you say that in Europe it's easier or in Asia?
So I would say that generally in Europe it's harder. And I'd say it's harder in Europe because of Europe is a funny place, and I take this with a grain of salt because I've only been here for 8 years. But I find that it's much more challenging to access institutional capital for startups here in Europe because the ecosystem of venture is much smaller, and also tends to be more frugal, right? US venture tends to be very free spending, and the most of all the different areas in the world. However, Europe produces some of the most interesting and innovative companies, and also has, arguably one of the best education systems in the world that, is the incubator for all of those startups. We all forget that, Ethereum was started in Berlin, and the first transaction was here in London, and, and our blockchain industry wouldn't exist if it wasn't for Europe. But I think that the challenge is always building up companies in markets where there is a matching of capital. And what Europe tends to do quite well is angel and family office funding, because there's a very broad network in many, many countries across Europe for that kind of capital. So small capital at early stages, I think, is relatively available. But then the trick is what happens next. When you need to scale up and raise 200, 300, 400 million dollars, then typically companies will need to go to the US because those are much more difficult to, those Series C and Series D rounds are more difficult to do here in Europe. And that's also, you have to look at the entire value chain, because if you're investing those funds into companies with the expectation of public market exits, then what's happening in the public markets will always have an impact on how enthusiastic venture is, because venture will be looking at, okay, I'm putting a check in here. I have to expect in 3 or 4 years, I'm going to be able to get an IPO or a trade sale out of this. But the weird part is they'll look at what the IPO markets are like today to make that judgment. And rather than thinking, what's it going to be like 4 years from now? So if the IPO markets are closed, they're not going to be thinking about investing in that segment, either at that moment in time.
Yeah.
That's human nature, I guess.
Yes. So talking about human nature, so we have venture capital funds like Revolut, for example, mentioned that they will be picking companies according to data, and AI will be finding the founders to invest in. So what do you think about this idea, and where you personally would use your gut feeling while investing in the founder, or is it only data based?
That's a very hard question, because I think whatever I say, I'll probably get proved wrong. I think I would still tend to go based on gut, because I think that I have yet to see AI that's still smarter than our own ability to, we don't understand as humans, I think, how many signals we process when we sit and talk and meet somebody. And it's a little bit like all those people at the CIA who get trained to spot people who are lying, and and how subconsciously we can tell if you're sweating or your micro expressions and all this kind of stuff. And I think we learn that as humans because it's innate to us, because a lot of it, judging when you make that investment decision, I think a lot of it is judging the combination in the founder of passion and willingness to persevere in spite of challenges, and sanity also, because you also don't want somebody who's going to persevere in spite of the fact that, maybe it's not working out, or the vision is wrong and they need to pivot, or because you don't want somebody who's too stubborn either. And I think those are very human nature questions, which I'm not sure that the data will necessarily bear out.
Okay, yes. And I think Ada Ventures did a big research about unicorns as well. And one of their arguments was that sometimes we get confused whether it's our gut feeling or just familiarity bias.
Yes.
What do you think about that?
So there's a lot of familiarity bias, and also this is why, for example, I'm a terrible trader, and anybody who's been in crypto long enough has flirted with buying and selling tokens at some point in time, and I'm awful. And it's because I'm human, and I get, and the people, my understanding is the people who are the best traders are the ones who are completely dispassionate and are like, okay, yes, I know it's gone up for days and days, but it's not going to go up forever. I'm trimming, I'm selling 30%, and live by those rules, because if you don't stick to those rules, you can't play the game properly. So I think, sometimes it's a difficult mix, because we're our own worst enemies, but yet also at the same time, you need to use that human instinct to judge.
Yeah, sure. And so you already mentioned passion, perseverance. What are the other 5 qualities in a founder that you would say, okay, this founder is going to be a unicorn founder?
I think humility, because you will notice almost without exception, the really successful founders are very humble. And because I think that humbleness and humility leaves them open to knowing that they don't know everything, and also leaves and also early success doesn't cloud that judgment, which is important, because you need to constantly be learning, and you need to constantly be afraid of your competitor taking you over at every turn, no matter how successful you are, because you have to have that hunger and that drive to keep, because it's a cycle of constant innovation, and that's the most challenging part. And I think that's, for me, one of the things that I find very daunting if I look at AI if you can generalize AI as a space, because the pace of change and innovation in that segment right now is absolutely mind-blowing. And so I think to be able to constantly be thinking of how to reinvent yourself every 3 months is just, I don't know how people get any sleep.
Yeah. Okay. So humility.
Yes. So humility, tenacity, and willingness to take criticism, but at the same time also being passionate about your convictions. Because the other thing is, you need to have a vision, and I think that it's the best way to describe it is, where you want to get, but you are open to the idea that the road might change between here and there, and you still have that belief in this thesis of that's where you want to get, but if the first road doesn't work out, you're cool with that, because you'll find another road or another road or another road, right? And sometimes those roads are a result of, you run short on capital, so you have to cut costs, you have to change the business model, or you have to raise more capital, and so I think it's being flexible to that adaptation, because most businesses will be completely different 5 years later than where they started out, and so many things that were will happen that were unexpected at the beginning of the journey, that it's the founder's ability to pivot and deal with those unexpected events that I think marks them out.
Yeah, amazing. Thank you. Any more questions?
Can you just ask, so you've been great at spotting those big themes and then
Yes.
diversifying your investments in the selected area. So some people say that quantum computing is the next big thing.
Yes.
I'm just curious, how do you incorporate that potential theme
Sure.
in your approach to investing?
So I think it's a space we've been looking at for a while, and it's something where I guess we learn obviously by meeting companies, but also we learn by making small investments. We've made a couple of small investments in quantum related businesses, and I think it's something that we're just biding our time to get an understanding of when it's going to really start to get traction as a sector, both from a tech standpoint, but also from a market adoption standpoint. Obviously quantum computing is going to have dramatic import on what's going on in the blockchain space. Everybody's worried about whether encryption will be broken, current kinds of encryption. But those are not problems that honestly concern me, because my view is that whenever new tech like this comes out, the sort of positive and negative tools tend to come out in equal measure. So there will be new forms of quantum encryption that come out also, because it's in everybody's interest to make these systems work. But yeah, I think it's an area that we should absolutely have our eyes on.
And then yeah, other
I think we've been spending a lot of time now on, I guess what you could loosely call agentic AI, meaning thinking about how AI will start to act more autonomously on behalf of humans. And this is mainly in the blockchain space in the case of transactions, because we do think that Web3 and crypto are going to be the medium of exchange for AI. We don't think that AI is going to be using our bank accounts and traditional methods, but trading tokens will be very straightforward for AI. And so that's one area that we've been spending a lot of time on, because again, I think we're entering a world now where on the one hand, there's been a lot of discussion in the media about how to differentiate AI generated content from human generated content. But I think at the same time, for businesses, we'll want to understand agentic commerce and agentic transactions versus human transactions. And that's not necessarily, unlike the media discussion, it's not one necessarily to bias one as being positive or negative, but it's just important to understand them because they're different constituencies. An agentic customer is a different customer profile than a human customer, perhaps. And as a business, I would want to know that and to understand that relationship. Just like, to go back to, we were talking about video games, people always complained about whether there's a botting problem in lots of kinds of video games. And as a game developer, I don't necessarily view that as an inherent problem, because if you as a player have 5 bots playing alongside you and they're all paying, I have 6 customers. I'm happy, right? So it's really just about whether they're changing the outcome of the game unfavorably or unfairly or something like that. But it's not that I don't want those bots as customers necessarily.
Oh,
Robby, going back on Yvonne's question about privacy and data as providers of data, as individuals, how do we break this 7 entity monopoly, if you will, and take that back and actually monetize it?
So our approach has been basically to build a decentralized ID system where you as a user can have your own decentralized ID. And then we have built a network of businesses, that essentially will recognize that ID when you show up as a customer, because we built it with the kind of the traditional loyalty, rewards, and retention scheme in mind, similar to frequent flyer miles. And the idea is that when you accumulate reputation, a business should acknowledge you for that reputation, if it's positive or negative.
Like a credit score.
Exactly.
Okay.
First person who said that back to me, and that was the vision, honestly. Because, and this is something, it grew out of our early experiences a few years back, because as we built out Web3 games, one of the mechanics that we used to drive users into new games at the beginning was airdrops, right? And we would airdrop tokens to people as an incentive to come into the game and try it out. And this also led to what we call token farmers, right? People who were just farming airdrops and not necessarily engaging with the product. They were just trying to get free handouts. So we thought, how do we differentiate these audiences? Well, have them build online reputation, because then if you're somebody who receives the airdrop, engages with the game, plays it, maybe stakes your tokens, then you're a positive user, you have a higher credit score. We will whitelist you for early access to the next opportunity, right? So we give you an incentive. Whereas if you're somebody who takes that airdrop and then just dumps the token the next day and moves on, then maybe we will put you kind of on the blacklist and the naughty step for the next opportunity. And then we thought, how do we then expand this out just generally to the idea of a platform where we can allow businesses to set those rules for themselves, because one of the reasons we think that consumers should want to voluntarily share their information with businesses in exchange for preferential treatment, right? Like when I show up in a shop and I'm planning to spend, it's a little bit like I saw a great skit from a comedian once, and he said that he thought, and this was an American comedian, so you will appreciate this because it's about tipping. And he thought that actually you should tip the moment you sit down in the restaurant and say, I'm going to tip a lot of money, so I expect you to kiss my feet for the entire meal because that's the service I want. Whereas, or you could just say, I'm not going to leave you a tip, so don't bother to pay any attention to me, and lay the foundation from the beginning. And I think, we think that businesses should be similar, because if I'm preparing to spend a lot of money with you, I want to be treated well. So then it's in my interest to say, well, actually, I have a lot of money to spend. You could see what's in my spending history, perhaps, or that, I come from, that I've shopped at all these other similar shops in the past, or something like that. And then I will be rewarded because you will, as a business, roll out the red carpet for me.
Yeah, Erin?
Well, my question is, what do you think of the future of stablecoin?
Mm-hmm. The future of stablecoin.
Yeah. What do you think the trend and the future? And obviously, are you in this space? Of course.
Sure.
Yeah. I mean,
So, so second question first, yes. So we have a joint venture called Anchor Point with Hong Kong Telecom and Standard Chartered Bank, specifically focused on stablecoins. And yes, we're big fans of stablecoins. So I think to have what we've been calling mass adoption for years in crypto, you need to the first thing that you need is you need a tokenized version of money, and that's what stablecoins are. So stablecoins are tokenized money. And so we have seen their adoption go crazy ever since essentially the administration in the US changed so that the SEC was less and less of a concern for people who were using and issuing stablecoins. So now that there is some kind of increased regulatory clarity, particularly after the Genius Act in the US, I think that has led to also other governments around the world taking the lead from the US, and at least, if not making new, more clear regulations, at least not saying negative things, right? And now we have MiCA in Europe as well. So there is some more clarity on stablecoins. And so we've seen the proliferation just skyrocket. So Tether now, USDT, has about 500 million holders. And that's reasonable distribution for a product on a global basis. So I think that's quite interesting. And it's because they found really, really simple product market fit. I don't need to explain to you the benefits of blockchain or why it's interesting to understand that a digital form of money is useful, particularly in countries that have very, very high inflation. So you see stablecoin adoption is through the roof in, Argentina, in Turkey, in Indonesia, and Vietnam, and, all kinds of countries that have currency controls or high inflation, because they see stablecoins, particularly US dollar denominated stablecoins, as an alternative that that is stable, literally, relative to local currency. And because transaction costs are so low, and it's peer-to-peer, it just makes sense, which is why we see, particularly in places like Nigeria, consumers using stablecoins just for everyday transactions, to buy food at the market or something like that.
Amazing.
right. Yeah. So the other thing, obviously, with stablecoin is security. It's, hacking and stuff. So obviously, you always think that, you go to a bank, you lock your money away, you're happy, nobody's gonna come there and rob. But obviously, with stablecoin, the worry is, people stealing your money.
Yes.
By hacking. So in that sense, on the security side, do you have a product on that side?
So we're not a custodian, but I would recommend, obviously, anybody. I think stablecoins are no different than cash, to the extent that for me at least, I would keep in my personal possession similar amounts that I would be comfortable with cash. There's a reason that we as humans came up with banks, because we as humans also like to steal things from other people. And so I think the same thing is true when it comes to crypto. And stablecoins, if you have a lot of stablecoin assets, then you should keep them with a custodian, and custodians will have terms and conditions, and they will have insurance and deposit insurance and things like that. So I don't think there's any special concern with regards to that. Now, there have been other problems across the Web3 industry of hacking, for sure. And I think that the easiest explanation for that is the one that what was his name? The famous American bank robber gave when he was asked why he robs banks.
D.B. Cooper.
Was it D.B. Cooper? And he said, because that's where the money is. And the reason there's so much hacking in Web3 is because that's where the money is. If you want to be a transnational criminal, then cyberspace is the easiest place. And the biggest honeypots in the world are in crypto because we do $4 trillion a day of volume, right? And so that's why you have literal government state actors like, the Lazarus Group on behalf of the North Korean government that are actively trying to, engage in criminal activity.
Okay, thank you so much. I think so. It's very insightful. We can spend a lot of time asking you. And I think Robby has a lot of podcasts, right?
We do, yes.
Yes, I think you're very active. Yes, thank you so much for that. So last two questions.
Okay.
One of the best advices you can give to investors in spotting a unicorn.
Yes.
And second one is, what is the vision of Animoca in the next 5 years?
So I think the best thing you can do to spot companies is to meet as many of them as you possibly can, because it's a volume game, and it's not just, I say, a volume game because we invest in lots of companies, but the more you meet and the more founders you meet, it's like anything else, you will get a sense for a stage of investment that you feel comfortable with, because again, investing is very personal, right? And some people only invest in sectors where they feel particularly passionate about something. You might be a healthcare investor because longevity in healthcare is something that you feel very passionate about, or something you have domain expertise about. So I think it's really about understanding where your passion is, because particularly if you're investing as something that's not your primary profession, then it has to be something you enjoy first and foremost, I think. Otherwise, give your money to a professional investor to invest on your behalf. But I do think meet as many founders as you possibly can. And also, with venues like this, where you can meet with other like-minded individuals who are also investing, you can learn from other investors, you can get deal flow from other investors. As a professional investor, I rarely look at companies that cold call me, almost never. And I get so much, just having investor in your profile on LinkedIn, as most of you know,
Yes.
I get so much inbound. And yet the ones that I look at time and again are when my friends at other venture firms who we've co-invested with over the years, I have lots of friends who are brilliant investors. And if they say, oh, I'm putting a check in here and you guys should take a look because we'd love to have you join us, I know that goes immediately to the top of my list because somebody else has taken a look at it. And that's based upon, my knowledge of those other investors as people, not just the brand name of the firm or something like that, but because I know that, they're experts at DeepIn, or they look at AI all day long and know much more about AI than I do. So I take those cues from them.
Back to the human element.
Exactly.
And it's actually, I stand corrected, it was Willie Sutton. D.B. Cooper's the one that jumped out of the plane.
Yes, exactly. Willie Sutton. We rob banks because that's where the money is.
Concept.
Yes.
May
Okay.
I ask, with all of your focus on the digital space,
Yes.
is your personal appetite for investment solely in the digital space, or do you personally still have an appetite for real world assets?
So that's really so. Personally, I found one of the most challenging things is to not invest my personal money in the same stuff that I invest in at work, because the theory is that that's absolutely the wrong idea. But it's very hard because I feel like that's what I know and I do it all day long. So why wouldn't I also, write personal checks for these things? But actually, like most people, the biggest thing I own in the world is my house. And I live in London, so it's turned out to be a very big investment. So I think, yes, all asset classes are interesting. I think for me, what I love about technology as a profession is the fact that it's so constantly changing. and we have the possibility from a local start to build quite a local global enterprise, and that to me is quite exciting about that. But otherwise, no, I love real world assets, and actually, the funny thing about, as you will appreciate, I'm sure, we renovated our house about 5 years ago, and renovating in London, I'm sure everybody knows, is has its own challenges. But the weird thing is that as soon as you finish, like 6 months later, you start thinking, oh, actually, I could do that again. And you start to forget what a pain it was before. So I wasn't going to compare it to childbirth because that wouldn't be fair with the women in the room. But that's what I'm told is the same thing, is you forget the pain and decide, well, maybe I could do that again.
Yes, exactly.
There's something about seeing physically something that you've created, or even when you mow the lawn, if you look out the window, like, I actually accomplished something. I didn't move a digit in a piece of paper.
Exactly.
That's amazing. So what's the vision of for Animoca for the next 5 years?
So I think, one of the things, we have a couple of ambitions. One, we actually announced earlier this week. So we're looking forward to going back to being a listed company. So we just signed an agreement to merge with a listed company on NASDAQ. And so that's exciting. We were public previously. We went private in 2020. And so hopefully we will be public again soon. And I think with that, we're hoping, of course, to bring more people on this journey with us, looking at the broader Web3 opportunity beyond, just the top few names in the space, Bitcoin and Ethereum. And obviously, Bitcoin has done an incredible job bringing awareness to what's going on in digital assets and blockchain. But we think there's such a more exciting and broader world of products that run with native tokens and other things. And we'd like to really, share that with other people. So that's also why I love to participate in events like this, because it gives us an opportunity, hopefully, to get people excited and engaged in other things that are going on in Web3 beyond just, kind of the best known product, of course, which is Bitcoin.
Okay, thank you. So how can people reach out to Animoca? What's the best?
So a variety of ways. Obviously, our website has pretty much everything about us, but I'm on LinkedIn and Twitter like everybody else in this space, or Telegram, or you name it. So and please, if anybody has opportunities to run into us at some of the events, we participate in most of the Web3 events.
Okay, thank you so much for your
Cool.
insights.
Thank you.